in Indian banking system, the development banks plays a very crucial role for the development of not only the country, for any kind of institutions. So then what is this development bank is all about? A development bank is a multi-purpose financial institution with a long-term development outlook. As a result of that, a development bank can be defined as a financial institution that provides all types of financial assistance, like even it can be a short term or a medium term, long term, to the business units in the form of loans or underwriting and investments and guarantee operations and promotional activities, economic development in general and industrial development in particular. So this definition gives you an idea what a development bank. So it is try to see that how we can holistically develop the nation. So this, instead of in individual finances, it focuses at a macro level which can help the nation. So now what are those development banks to say that? So in the development banks India, you can see majorly 5 types of banks in the India. That is industrial development banks, you might have heard, for it provides finances for the industrial, that is IFCI, IDBI and SIDBI. We will discuss a little later about each one of them, what it is and how it functions. Again, there is another kind of, we said industrial development banks. Now we have agriculture development banks also, which is one of the popular, we all know. NABARD is the most important bank in the development bank sector. At the same time, we have the third category is export import development banks, which is known as a Exim Bank. Okay, the industries who are involved in this export business or import business. So this Exim banks have a designed specially for these kind of operations to provide a financial support. Then we have infrastructure development banks. Okay, that's a fourth category, like NHB, IFCL is also there is. And the last one is the sector specific banks. We have like PFC, REC and TCIL. As I told you, as we move, we will try to understand each one of those and how it goes. Now, what are these development banks? All we are talking about. So these development banks are also known as a term lending institution or development financial institutions, which is short form TLIs and DFIs. So these two are the specialized financial institutions under the banking system in India, which provides a long-term finances, supports to the sectors of the Indian economy which possess higher risks and cannot have access to adequate loans from a commercial banks. We all know people, whoever wants any kind of loans for their business purpose, traditionally we look at the banks for taking a credit support so that their financial activity or economic activity will continue. But all kind of loans you may not be able to get from a commercial banks. We will also try to understand the difference between a commercial banks and development banks. But for this moment, let's see that idea of development banks, which is trying to cater whatever the commercial banks are not able to provide. So these development banks would be ready to provide loans for their requirement. Now, what is the difference between a commercial banks and development banks? It differs in their primary focus and operations. Like say, for instance, commercial banks are primarily concerned with the profit, right? Because the commercial banks, any commercial banks, they need for a survival. So they see that whatever the activity they do, at least a minimum rate of revenue they would expect. Now, the development banks are the major aim, like we have discussed 5 categories of banks. So this all development bank major aim to promote economic and social development by providing financial resources for a projects that might not otherwise secure financing from a commercial banks due to their higher risk and long gestation periods, or because they are not immediately profitable but have a significant long-term benefits to the economy. Because the commercial banks, the major targeted audience are the retail and small or the corporate entities, which they see what whenever you borrow the loan, how much you can repay, how much it is creating an impact. I mean, more than impact, they will see whether they will be able to recover or not. So these development banks, though they also look at recovery mechanism, but the major goal will be that end of the day they should be in a profitable, because we talk about non-performing assets which has impact on the operational activities and profitability of the banks. So whereas a developmental bank, so it is having a social concern or have a long term, because like infrastructure project for instance, like whenever you construct a national highways or you build an airport. So these are all relatively a long term based, and it has long gestation periods also. At times commercial banks may not be so keen, and in that the development banks would help us to get a required finances so that they will be able to continue their business which will have. Then if this is what is the objectives of this development, because we are talking about the economy and the growth of the nation. So what are their objectives? So the development banks clear objectives to promote the industrial growth, so that there could be some employment generation can be there, as well as certain goods and services which will be exports which may go. So in that sense, to promote industrial growth is one of the major key objective for this development bank, and develop the backward areas. We all know that the regional disparities are the one of the major concern for a country. To bring that balanced growth across the country, so the governments has to, or the financial institutions has to lend certain amount of the money to build a required infrastructure. Once the infrastructure is in the place, naturally there can be investments will be attracted, so that the area also will be developed. So hence these development banks will focus on particularly even in the backward areas. The another is to create more employment opportunity, okay, and to encourage modernization and improvements in technology, because today the world, the technology is changing at a faster rate, and every field it has to be upgraded and updated to survive in the market. So this would help, these banks would help to finance such kind of initiative to take in that. And also, as we all know, today the government of India is also trying to promote the self-employment or entrepreneurships. So this development banks is one of the major criteria to promote more self-employment projects. Okay, so people who has certain innovative ideas would like to, idea can be developed and make as an actionable project, so that you will be able to get a finance or credit support from this. So this is also targets. And to revive the sick units, some of them already established due to their own operational issues, or it is the industry or the specific sector might have been facing certain challenges due to the domestic factors or international factors. And if those companies are looking forward for financial support to revive them, so wherein you also get support from these financial institutions. And another is to improve the management of large industries by providing training, and also to remove regional disparities and regional imbalances, and to promote science and technology in new areas by providing risk capital. That means it is like these banks also may support for research and developmental activities. If you are, again as I said, any financial institutions including development banks, if your idea is workable and it can be scaled by looking at the possibility to make it a reality of that idea into the process, if it is convinced by the experts in that particular field, would definitely provide, even though it is risky, if idea is innovative and idea can generate a positive impact in the society and economy. So these banks would take higher risk and give you the loan. To improve the capital market in the country, of course, this is indirectly providing required capital for those industries or the firms, which would also help them to grow, so which indirectly positively also contributes for the capital markets. What is the role of these development banks in our financial system? I mean, see, we have stated certain objectives. Then what role it plays in the financial system? It is, to make it very simple, it providing funds, infrastructure facilities, promotional activities, development of backward areas, planned development, accelerating industrialization, employment generation. This is like a cycle. Okay. So as you have available required funds for your business to proceed, so this all can have a kind of multiplier effect in the industry. Now let us try to understand what are the functions of these development banks. To promote and develop a small scale industries in India. Okay. So it is very clearly, even in the recent budget 2025, we have seen the limit has been increased from, for small scale industries, from 5 to 10 crore, for startups 10 to 20 crore. So it is, and these are the banks which is directly provides loans for such kind of people. So it is clear agenda that to promote and develop small scale industries, which also provides innovation and which will increase the production and productivity and new products into the market, which will not only provide the domestic employment, as a nation, we will be very competitive in the global market. So the second is to finance the development of the housing sector in India, one of the development banks which also provides to that, and to facilitate the development of larger scale industries in India. So these all development banks are catered, while I was explaining you 5 categories. So it trying to provide credit facility to all the sectors, including the small scale to the large scale, to the agriculture and service sector also, in their respective areas which will be facilitated and providing. So in that way, this also helps to help the development of agriculture sector in a rural India, to enhance the foreign trade of India, to help the sick industrial units. As I told you, if the industrial units for some reason they are not able to perform, but now they see there is a potential to grow, and due to lack of funds, if they are stuck, to revive it, these development banks would help them to provide the additional funds so that they can move ahead. So to encourage the development of Indian entrepreneurs, so the small scales or the industries are growing very much in India. Even the 2025 Indian Economic Survey has clearly also acknowledging, which is based on Hyderabad, something called a V-Hub, which is women entrepreneurs. The way the women entrepreneurship activity has increased after setting up this V-Hub. So it is encouraging to see such positive developments by providing a credit facility and providing knowledge and training for them to start their own businesses and scale it to the new heights. That is also visible through these development banks. To promote economic activities in the backward regions of the country, to contribution in the growth of capital markets, which we have seen this, we can say, major banks. Now then what kind of banks this, can we have some idea about it? Yes. Let's start with this industrial development banks. What are these industrial development banks are we? IDBs are a specialized financial institutions under the banking system in India. These are all established to promote industrial growth by offering financial assistance and support services to the industrial sector. For that, if you see another FCI, which I said IFCI, Industrial Finance Corporation of India. This is also Industrial Development Bank, which was set up in the 1948 as a statutory corporation to provide a medium and long term finances to the industry. And the primary business of this IFC also, if you see, to provide a medium long term financial assistance to particularly manufacturing, services and infrastructure sectors. So these IFCs are providing services for the people whoever wants to invest or take up some process involved in the activity or setting up a industrial units in the category of manufacturing, service and infrastructure would be receiving support from this. And we have another called Industrial Development Bank of India, IDBI, which also has one part of it a commercial bank, other side they have Industrial Development Bank idea. So this IDBI was started in the 1964 as a subsidiary to the Reserve Bank of India to provide credit to other credit and other financial facilities for the development of the Indian industry. So at present, it's a full service commercial bank under banking system in India. It supports industrial growth. And another one, we have a Small Industries Development Bank of India, which is also popularly known as a SIDB. So this SIDB was started in the 1990 as an independent financial institution under the banking system in India to aid particularly to the growth and development of our MSMEs, that is micro, small and medium enterprises in India. So this SIDB is the people who wants to get a smaller loans would be great help if you approach the SIDB. So this SIDB acts as a principal financial institution for the promotion, financing and development of MSME sector in India, as well as for coordinating the function of institutions engaged in similar activities. So this is very clearly tells us that people who want to start the MSME sector, any kind of institutions, instead of depending solely on a commercial banks, can look at this as SIDB and approach them, so that your chances of getting funds for it is relatively very high. Now there is something we call agriculture development banks. Okay, as we know, India is the one of the major the sector is an agriculture sector, though it might be relatively less, it is contributing for the GDP, but still majority of the section, more than 50% still depends on this agriculture. And for providing support for this agriculture sector, so this agriculture developments have been set up, particularly NABARD, that is National Bank for Agriculture and Rural Development. So for agriculture and rural developmental activities, the NABARD is been very supportive and providing a lot of employment under these two schemes. So the NABARD was established based on the Sivaraman Committee in the 1982 with the primary responsibility of matters concerning the policy, planning, operations in the field of for credit for agriculture and other economic activities, particularly in the rural areas of India. So NABARD is majorly targets, because urban, semi-urban areas also may be there, but the priority for NABARD is the rural agriculture and rural development. So this provides a greater relief for it. And NABARD main agency for implementing the Rural Infrastructure Development Fund scheme. So NABARD is also having the main agency which is trying to implement the Rural Infrastructure Development Fund scheme. So in this capacity, it performs the following major roles. One is it serves as a apex financing agency for the institutions providing investments and production credit for promoting the various developmental activities in the rural areas. And the second is the refinances the financial institution that finance the rural sector, like including this state cooperative agriculture rural development banks, SC, ARDBs, state cooperative banks and well-known regional rural banks, commercial bank and other financial institution approved by the RBI. And all this the regional rural banks, NABARD will be supervising the activities of it. So in this way, the NABARD is playing a very crucial role for the promoting and providing the required credit support as well as research and development and infrastructure activities for as a part of agriculture sector. Now, the another most important for the countries is exports and imports. So many of today the firms trying to import certain goods and services so that they can provide them in the domestic for the domestic citizens, and some kind of other goods where we also export for various countries. So this export import bank, this is facilitates and promotes the country's international trade by providing financial assistance to exporters and importers. So the Export Import Bank of India, which was like we have the Exim Bank, which was set up in the 1982 to take over the operations of the international financing wing of the IDBI. So this Exim Bank also has taken over the international financial operation. IDBI do exist, but international finance wing has been taken over by this Exim Bank. So what this bank do then, this Exim Bank, it provides Indian exporters with financial assistance, overseas investment credit and technology import finance among other services. So this is one of the crucial bank for people who are involved in the international export and import. So this bank is in a greater support, which has made a significant contribution for our overall trade in the country. Okay, so now the another very important one is the infrastructure development banks. As we all know, the government of India believes that the development of infrastructure projects can foster the growth of development and it sustains. So hence it has been building the national highways, road networks, under the UDAN scheme, many airports. So in the country, the infrastructure is trying to increase in a better and improving not only the urban cities, from the rural village to the mandal headquarters. So everywhere the road construction is very playing a very crucial role, and the government of India is successfully taking these projects and completing very well. So any people who are involved in this infrastructure business, or they need a kind of a banking support which they can receive from this. So this IDBs, that infrastructure development, basically dedicated to financing the development, construction and improvement of country infrastructure projects. So under that, what are the other institutions? Let's take few of them. That is National Housing Bank. So this National Housing Bank is a state-owned bank and regulator that supports the housing finances institutions and promotes housing finance schemes in India. So any kind of housing scheme, so this bank works, and this NHB is also regulated by the Reserve Bank of India. And another is the India Infrastructure Finance Company Limited, IIFCL. Okay, so this India Infrastructure Finance Company Limited, which provides long-term finance to viable infrastructure projects, particularly in the broader category sectors of, say, transportation, energy, which we are today talking about, a lot of renewable energy because of the global warming. So we wanted to promote the electrical vehicles and the solar panels, so we are trying to build a lot of energy infrastructure so that we can meet not only the present demand, even in the future demand. So energy, the water, that water is a kind of projects which can be for irrigation projects or any other, like sanitation, communication, social and commercial infrastructure. So basically this is company which is trying to provide support all kind of infrastructure development companies, whoever is coming forward to undertake those projects. So this IIFCL is one of the major a good source of this. The sector specific banks. So these are the development banks. The last part is the sector specific banks, which are majorly, like certain example, let's take Power Finance Corporation. we have PFC, which is known as PFCs. Power Finance Corporation provides financial assistance to power sector projects. If any company has started their own power extraction, power generation units, so where you can probably get, whether this may include both the renewable and non-renewable energy projects. So the another is the Rural Electrification Corporation. So this is basically focuses on financing the projects which aim the rural electrification. Probably you may get loans under this. The central government is coming up with the Surya Ghar Vamshi Yojana solar, because that's a rural electrification, particularly the households which are not still having an access, probably get priority to get. So such kind of institutions, this Rural Electrification Corporation would be providing certain loans, which is involved in that. Another is the Telecommunication Consultants India Limited, that is also known as the TCIL. So although primarily the consultancy organizations, Telecommunication Consultants India Limited also plays a role in financing telecommunication projects. Like say we move from 4G to 5G or 6G. So all those, the kind of R&D or the kind of innovation, the technology which is coming. So the specialized DCIL would be able to provide them in a much better and longer this. So these are the major development banks in our country. So now one may get an idea that so many developmental banks are there, institutions are there. Are there any government initiatives or the plans which having? You can see Make in India initiative, which is supports for industrial development. Startup India, Development Bank funding for the startups. So digitalization in banking, modernizing financial services. Green financing, that is a sustainable infrastructure funding. So these are the certain initiatives governments has been taken, which also helps the people to grow better. Overall, to conclude, development banks in India has played a crucial role and been playing a very important role for meeting all the sector requirements, be it agriculture, industry and service sector. So the aspirants also who wants to take part of the self-employment or entrepreneurships may utilize by approaching this developmental banks for their credit requirements. Thank you.